Welcome and hello and welcome everybody. Hello and welcome. Happy Friday. Welcome and hello. It's Un Poco Mas, the show where we give you just a little bit more. Oh man, wanted to do a Neo video yesterday. 'Cause got a little pop on the, of course, management releasing the news that this was going to be the first profitable quarter on a non-GAAP basis, and I've run some investigations into why that is. And yes, it is the reasons they state, the improved product mix, improved margins, et cetera, et cetera. But there's also a few, a confluence of certain accounting factors coming together with revenue recognition and a lot of, you know, um, older swap stations rolling off the books. And certain things are just kind of coming together where, given the sort of even, sorry, I'm having trouble talking today. I don't know why. But management is even talking about how the early 2026 is going to be weak for deliveries in the EV sector in China. So whether they can repeat that profit, time and time again and sort of get out from under the overhang that this is a, cash burning nightmare, dilutive, lucid dream type of thing. Take that, not a lurker. Sub and like. Um, you weren't first. Not a lurker and Jordy Sanders are already above you, but you guys can't see that. Anyway, welcome and hello and welcome. What's up, Endry? Will Neo hit $10 this year if they keep the profits coming, if they keep the deliveries accelerating? Interestingly, in terms of Neo news, they reached the 100 millionth battery swap milestone. They project the first quarterly profit. They were also, and they've done that with relatively few cars on the road. So if you do the math, most Neo owners use battery swap constantly. I was a little surprised, not surprised given sort of where the market was, but how does the market interpret capex from these different Magnificent Seven companies in terms of building out AI infrastructure? Like Google, they seem to love it. Meta, they seem to love it. Um, with Microsoft and Amazon, they seem to hate it because I think the market hates delayed gratification. The market hates something that's going to hit your operating margins today and improve your bottom line in 5 to 10 years. Of course, the market is reactionary, short sighted, volatile, all these things, temperamental. But Tanner, yeah, I heard somebody was telling me Tanner and Tevis just interviewed Anthony Noto. That's awesome. Congratulations, guys. Yeah, that's I kind of knew that was coming. Everybody was sending some rumors around the block. Are they on right now? I should have watched that. Sorry, I was at work, guys. I just started rambling. Came on for a quick lunchtime ramble because I don't get a lot of breaks. So I just get on when I can. But good for Tanner and Tevis. That's awesome. They have been diligently covering the SoFi stock inside the numbers for years and years and years now. Of course, their show was SoFi Weekly, so they were pretty focused on that until they got a takedown notice. But maybe since Noto came on, they can work something out with the legal department. But no, that's awesome. I will have to watch that ASAP. I really like Amazon in terms of the capex because I think people don't even see where Amazon is going. I mean, Amazon's big problem is labor. You know, it's the big problem is running these warehouses, running this infrastructure. Once it's all modernized, mechanized, robotized, AIized, you're going to see their labor costs fall dramatically and you're going to see their margins even on these, retail product businesses, I believe, improve dramatically. And Amazon's sort of running that model Walmart ran on middle America Main Street, which is like crush the competition with price. And then as soon as the competition is out of business, you're going to increase your price, increase your margins because you're effectively a monopoly in that town. I mean, otherwise, if you don't go to the local Walmart to get any other options in a lot of places in America, real options, you might have to drive extended periods of time, burning a lot of very costly fuel. So it's just not a realistic option. I think Amazon is going to be a huge, huge long term winner in terms of AI, but people are scared of the capex number. Same with Microsoft. Microsoft's telling you we have demand for AI right now. And I think they're monetizing that demand right now. The sell off in Microsoft from 550 or whatever down to I think it went all the way down to like 380s. That was way overdone. Way overdone. Average analyst price target on Microsoft is 600. I mean, and again, I'm not saying analyst price target are the be all end all, but there's a lot of really good analysts covering that stock. So for it to have 50% upside versus the other Mag 7 stocks that have, 10, 15, 20, it's a pretty big, matzo ball hanging out there. So I'm a very strong buy Microsoft. I'm a very strong buy Amazon. I love Google. It's run a lot. I think it's still a reasonably good value. And I think Meta pulled back in a reasonable buy range too. I mean, I'd buy any four of those stocks, but I'd buy Microsoft first and I'd buy Amazon second, I think. Or I'd flip those. And Google would be third ahead of Meta, but I really like all of them. I mean, if you have the ability to buy all of those stocks, go ahead and buy them, because they make massive profits and massive margin. I know Amazon doesn't make massive margins right now, but those margins will improve. That is a company built for technology, built to be transformed. And they'll do it. They'll do it. Amazon will get a lot leaner in terms of its cost structure, but wider in terms of its footprint. It's going to be a very interesting time next 5 to 10 years, see how this, robotics and AI really shapes the physical world. We know it's going to shape online. We know it's going to shape, your assistant, your search queries. Sorry, guys. I'm getting a little bit under the weather. It's really hard to talk. Yeah, I have to agree with you there, Matthew. I think Microsoft is the safe play. I think they exploit, their B2B relationships to, leverage AI, Copilot, OpenAI, Azure. It all works together. And Microsoft is an absolutely sure winner. But if you're looking for that, asymmetrical upside, I think Amazon might even be the better play than Google, believe it or not. Because Amazon, I kind of equate it to with what SoFi did. Amazon has done the difficult foundational work that is, let me make sure my mic's on. Sorry. It'd be hilarious if I wasn't on this whole time and nobody told me. Yeah, dude, that's awesome, man. I'm seriously happy for Tanner and Tevis. You guys, that's very hard work what they do. You really have to spend a lot of time researching and staying on top of everything. I mean, I don't really do that because I don't have time. I got a real job. I take care of my kids. No, but it's really hard. It takes a lot of effort, and that's great. I love Noto. I just love Noto. As an executive, I guarantee, this company is going to be a success. I mean, obviously, I can't guarantee it, but I'm as sure of it as I'm sure of any investment. Ooh, J Money likes the sound quality. Yeah, that's awesome. Because I think that's what's really the missing ingredient in the SoFi valuation is like selling it. The product is there, the growth is there, the profit is there, the EPS ramp is going to be there. Did you guys notice something a little bit funky on the SoFi chart? I looked pretty carefully and I only found one gap on this run from 12 to 32 that hadn't filled. And incidentally, do you know where that gap was? That gap was between about $19 and I'll tell you exactly. It was between $19.29 and $19.66. This little guy right here where this yellow X is, was the only gap remaining on this chart. There was another little gap here. It filled immediately. In 2 days, it filled. That was the gap between, 26, but very minor. This gap down here from 28 to 27 filled here in dramatic fashion. So this was the only single solitary, and I'm not huge on this gap thing that they all have to fill, because they don't all have to fill. I mean, I've seen it where it doesn't happen. But if you look at the high here, it's 1929. If you look at the low over here yesterday, it's 1919. So for those of you that were waiting for that gap to fill for this stock to run, that gap has filled. And then you have the let's see. Oh, so you guys are still looking at me. Oh my god, I'm horrible. Thanks, guys. Sorry about that. Yeah, I meant to do it. Sorry, showing you. So this was the only gap on the chart that hadn't filled right here. Sorry, I didn't show you that. You have to take my audio and use your imagination. Thank you so much, J Money. That's why we need not a lurker, guys. You see how much we need not a lurker? I could be on mute. I could be stupid. I could be chunky. And he's there on the bat phone to tell me, hey, you look chunky. Nothing we can do about it right now, but I just wanted to let you know. Yeah, thanks. Anyway, ET5 is a good car. I agree with you. Nio is a Chinese company. Wall Street don't like. That's true. They released the news. Price will drop 15%. So I can't even tell what you guys are talking about. You should know they make robots then. Everybody makes robots. I make robots. Anyone buying the Oracle dip? No, I don't like Oracle. Nio is a sex robot. Yes, you can use it for that. There's no tailpipe. But anyway, that was the only gap right here. And that filled yesterday. So this, I don't know if that means anything, but for those of you that it does, the only gap that filled. Steve, the big sexy, he had another article on SoFi, pound the table moment. I was pounding the table as upgrades from large banks roll in. They're guiding for 30% year-on-year revenue growth and 52% year-on-year adjusted EBITDA growth in 2026. I mean, he goes through the valuation in pretty convincing fashion. SoFi's adjusted net revenue increased 37% year on year. Adjusted EBITDA increased 60% year on year to 318 million. Management provided strong guidance. We all know that. On the bottom line, SoFi's expecting 825 million net income for 2026, which is a 72% year on year increase. You notice how the profit is increasing so much faster than the revenue? Shocker. That's what they built this thing for. While market is punishing SoFi, JP Morgan Chase upgraded to 31. Yeah, and Chase has been trading the stock like crazy around these swings. So I don't trust a word old Reginald Smith says. But anyway, SoFi has not executed sales of their loans for less than 105.1%. So they sell loans above expectations on the open market whenever they want, and their loans are of the highest quality. I think that SoFi just delivered a pound the tail moment. The sell-off is significantly overdone. I'm not going to read the whole article because it's a long article. It's a good article, but it's a long article and it takes forever. They delivered an incredible 2025 Blue Owl Capital. I mean, that's a little bit of a tough name right now, but SoFi sold tranches of personal loans each quarter at an average of 106.23, which validates their previous deals with companies such as Blue Owl, where their expanded loan platform business with an additional $5 billion agreement. There's no shortage of demand for SoFi's loans, and this continues to be a cornerstone of their business, adding to the top and bottom line. SoFi reported that their personal loan net charge-offs were 2.8%, which declined 57 basis points year on year, further indication of the credit quality they're underwriting to. And again, you guys can go through this. 443 million in fee-based revenue. This increased 52% year on year. Student loan originations up 38%, 1.886 billion. Home loan originations, SoFi broke 1 billion for the first time. Segment increased 95% year on year to 1.13 billion. Even though interest rates have been coming down, personal loans set a new quarterly record of 7.5 billion, increased 42% year on year. You guys know all this stuff. SoFi's profitability is scaling. The contribution profit from lending business increased 40% year on year to 550 billion. I think that's 550 million. He meant, but SoFi added more than 1 million members in Q4. The deposit growth is wacky with this company. I mean, look at these charts, guys. This is member growth. This is deposit growth. Do you see any weakness there? I mean, both are accelerating, but deposit growth is accelerating rapidly. I mean, see how many lines it took to go from just under 20 to just under 30? And then it just took 3 quarters to go from just under 30. Now they're pushing up near 40. See how fast that's accelerating? Beautiful. Fucking beautiful. I look at SoFi's guidance, modeled out this is the critical part, what their EPS would look like if their current margins projected growth. See, they're projecting, 4.66 billion. Their adjusted EBITDA will come in at 1.16, which is 34%, where their adjusted net income will be 825, 18% margin. LaPointe indicated SoFi expects to deliver compounded annual adjusted net revenue growth of 30% from 25 to 28, with adjusted EPS growth rate of 38% to 42% over the same period. This is very bullish from SoFi and it creates a unique value proposition for them going forward. I took SoFi's guidance, modeled out EPS. You can see that, down here, how low that forward PE gets by 2028 when you're still growing at 30%. I mean, that's obviously at the current share price. And they're still using the current net income margins and stuff. So this stock is really undervalued for the GARP. I mean, if you're going to pay for the GARP. On a quarterly basis in 2025, listen to this. SoFi's net income margin has gone from 9% in Q1 to 11% in Q2 to 14% in Q3 to 17% in Q4. In 1 year, the net income margin has gone from 9 to 17 in a straight line up, guys. Adjusted EBITDA margins expanded from 27 in Q1, 31 in Q4. So they're still expanding adjusted EBITDA. I mean, obviously not as quickly as net profit, but that's remember I was telling you that till I was blue in the face. Net profit expansion will trail that adjusted EBITDA expansion by, 4 to 6 quarters, however long it takes to shake things out. What's going on, guys? Hello and welcome. Scotland, everybody caves. Everybody caves. Yeah, so probably nobody's watching this. I should just give up this show and go watch that. But I have to get through it, guys. It's the only time I have. I can kind of sneak around and watch, but I can't do a live broadcast. So yeah, I totally understand if you guys want to go watch that show and watch this later. No offense, No offense. Yeah, Hims sucks. Hims absolutely sucks. It's mail order. It's a mail order pharmacy. It's really what it is. Dressed up. It's a piece of crap. But anyway, that's just me. Now, I could buy it eventually, but the problem is there's a lot of risks, a lot of regulatory risks, a lot of partnership risks, a lot of contractual risks where you're counting on a lot of other parties to, go along with your program because you don't really make this stuff. I mean, you're basically like a middleman in a marketing, you're a marketing company. I don't know. I need more Shopify, but I need the dip to dip. Last buy was 73. Interesting. Mother Wellman, random fun fact about me. I'm half German, half Mexican, so I love tacos and brats with sauerkraut. Excellent. Excellent. I love both too. I thought I was mostly all German, but then it turned out I wasn't much German. I was mostly Spanish. Who knew? Anyway, yeah, tacos filled with brats. Why not? Sauerkraut. Yeah, it's good stuff. Mexican food is like my favorite though, so it's just nothing better than carnitas. Oh, so juicy, the carnitas. You look like a man who eats a lot of carnitas, am I right? See. I had it made custom, Carl. Yeah, I had it made custom. My buddy makes hats down in Houston. Down to New Orleans. Yeah, there's a bathroom nearby. Not a lurker's hungry. The guy does a lot of cardio. Let's see. Carnitas all day long, brother. I'm with you. I do like the place my brought in the taco. Little the old In-N-Out burger, if you know what I mean. Know what I mean? Know what I mean? Nudge and wink. Here's your mom. Know what I mean? Yeah, I definitely custom because of the design or custom because it's filled with wait, what did you say? No, it's adjustable, Carl. It's an adjustable hat. It's just a regular old hat. Yeah, no, I just got it printed off the internet. I don't know how I order these things. I lose consciousness. I come to, there's a bunch of custom trucker hats laying around. What the hell do I know? So what else was I going to talk about, guys? Go through the valuation. SoFi is grossly undervalued. And the reason they're grossly undervalued is because everybody thinks the CAGR is going to be 18 to 20 when SoFi is telling you it's going to be 30. And if SoFi is telling you it's going to be 30, that probably means it's going to be 35. It's that simple. The valuation models are broken because the data you're putting in is garbage. Garbage in, garbage out. Garbage in, garbage out. It's like the genetic testing in the OJ trial. The glove don't fit. You must have quit. But in real life, he wouldn't be trying it on over a rubber glove. Hilarious. But they let in as evidence, dream evidence from the Reverend Dr. Rosie Greer. Dream evidence. Come on, Judge Ito. You're better than that. Your facial hair, though drawn on with a magic marker, is impressive. What was I talking about? This stupid show. SMCI looks incredibly good. This chart can really run. I mean, this has been suppressed. The shorts did not see this news coming. 18% short interest plus institutional ownership and insider ownership, both strong. 60% institutional. You're talking 25% insider. So, between the two, you're at 85%. There's not a lot of shares to go around versus that big short on the stock. Got the great Alberto Berti Avalos here. Back again. Guess who's back? What's going on? I'm going for president. Who on your list? Because I'm long-term, I would probably load Crispr just for its safety, but Nio is so tempting for the upside because of any stock that I think could double very, very quickly right now. I think that could be Nio. You get an announcement of some partner cars. You get some announcements I think could drive that stock. I mean, you saw it push up to 8 not that long ago. But for me, SoFi, SMCI are probably very strong 1 and 2. I just believe with SoFi, you get almost certainty that the company grows and thrives and eventually gets the S&P 500, pushes up to 40 and 50, and then I think eventually it'll be a $100 stock. I don't know exactly how many years that'll take, but I hope to be alive to see it. With Supermicro Computer, I think the company has been completely misjudged, misunderstood, maligned, and just painted with such a broad brush. I don't really like to be painted with a broad brush. Just do my Owen Wilson. I mean, I'm a 62-year-old guy playing somebody who's 28, confused as a wedding. You know what I mean? The crow's feet on my head say 64, but the script says I'm 27. My old buddy Vince Vaughn's also in his early 20s. Looks like Frankenstein's corpse. Forget about it. I don't know. Sex robots. Well, we can do that. Let's see. Yeah. Premium the option. Peter. I should, if I knew they had Noto on, I would have been listening too. I wouldn't have started this stupid show. But anyway, Supermicro, extremely good, volume still, shorts not covering. If they can get that margin expansion through building blocks that they're talking about, the criticism was, well, building blocks only accounts for 4% of the profit because it's a brand new product line. But I think you're going to see that product line grow like wildfire because what companies like Microsoft need, and they need that compute capacity now. They have demand they can't fill now. I don't know why people think it'll take them so long to monetize that demand. It's ready. They're monetizing AI, I think, just a little bit more under the radar than companies like Google and Facebook. It's fair to say companies like Google and Facebook, I think, are far more consumer retail facing than, a company like Microsoft, which I think is sort of, over the decades fallen out of favor with the cool kids and the retail and is dominant in business, industry, education, institution, all that stuff. And I think that's where you monetize more systematically, more effectively, more reliably. It's more of a sure thing. I think Microsoft is an absolute sure thing. Long term. And I think it's completely oversold. You look at Microsoft, average analyst rating is $600. 50% upside. I mean, you don't see that in any of these other names. I mean, you look at a name, for instance, like Google, and again, I'm not saying analyst ratings are the be all end all. It's just a data point. I mean, 17% upside versus 50% for Microsoft. And these are a lot of the same analysts covering both of these stocks. I mean, one, I guess, is there's slightly different sectors in some respects, but still a lot of the same analysts. You'll recognize names. And these are real analysts. These are guys who've been around for years and decades, and they actually know what they're doing, what they're talking about. They study the company. It's not like some of these hacks they throw up from, on SoFi. Got like, the bologna sandwich, 5 head, Chia Pet, Midwest Values, the bowling ball headed parrot, these types. Anyway, I love SoFi, I love SMCI, but I do absolutely love Microsoft. I think it's going to be the AI sleeper. I think it's going to grow right into that valuation at 600. I mean, it was trying to press past 550 at the previous earnings. And then this last one, I think this Azure slowdown is super overblown. That's going to reaccelerate. It's a structural issue. They just don't have the capacity, which is why I think something like a building block solution would make a lot of sense. In terms of Crispr, again, holding this under $50, under a $5 billion market cap, I think is completely unrealistic, given what Vertex just paid for, the valuation they put on the Caskevi program. I think their pipeline is incredibly strong. Their balance sheet is even stronger. What really scares you with these companies is the lack of runway, the lack of cash, the lack of capital. They have some recurring revenue coming in from the Vertex deal, and you think, Caskevi, they really think is going to start to ramp much, much faster this year. Well, EU is looking to, reduce everything America right now. It's not a good thing. Yeah, Amazon's going to buy you everything you need. Doesn't Amazon ship beer and alcohol? Thought they did already. You can get it with like Uber Eats and all that stuff. You're complete raging alcoholic, you can definitely get some booze delivered straight to your door. SMCI is a top player in liquid cooling, and that is where they will take market share from D. Yeah, they're both. Yeah, they have strengths and weaknesses vis-a-vis Dell and HPE. But the point is, for me, Matthew Wellman, there's plenty. That pie is so huge and growing so fast that there's plenty of meat on the bone for all three of those companies to do extremely well. And where SMCI really, beats everybody in terms of everything is the cloud hyperscalers. That's who's going to use SMCI. So the Elon Musks, the Microsofts, they're not as strong, I think, as HPE for like sovereign AI, and then different types of data centers. Other, different companies have more strengths. I mean, they can all do all of them. But it's just they hire different ones for different reasons depending on what their, needs are. I guess the best way I can mangle that thought. Anyway, I'm out of wheat green tea, for God's sake. Yeah, Matthew, that's gonna happen for shizzle. I mean, it's gonna happen. HP is just moving their manufacturer to Vietnam, and apparently it's a shit show. Yeah, because Uncle Chucky knows how to operate in Asia. I mean, I don't say that because he's of Asian descent. He's building factory. Yeah, they have a factory up in Malaysia. They're very savvy in terms of operating within, the confines of the law, of course, in China. Once ran a marathon and got in his way, drinking Dos Equis. There you go. What's going on? Absolutely, SoFi is going to the moon. But I'm a strong buy Crispr. I'm a strong buy TENX. You've got a nice little pullback on the stock from this pump and dump up to 18. You got a nice, little pattern here where I think you have some support in this area. Now, could the stock go back down here? Sure. But I don't really see it. There's too many positives. The market cap's way too low. The balance sheet here is very, very strong. You've gone through the tough dilutive money raises with Roth years ago. You got the better money raise with Oppenheimer, and now you can get all the way to the finish line without further dilution. I know there's some warrant overhang, but this to me should be like, once they get the FDA approval, this should be $1 billion stock. I mean, 5x mature sales, you're probably looking at $1.5 billion, a couple billion. So, yeah, Tanner, I'm sure I should go over there if I could figure out how the hell to do it, but I don't know. They probably don't want me like streaming their stream. Yeah, that's a huge get. I mean, Noto, it's as good as it gets for a fintech. A fintech. What would you call it? Somebody who covers fintech, fintech reporter, fintech aficionado. Yes, Stevie DX, Big Wang, Lil Pecker. Let's Poco Moss. That's a hell of a name. Tanner deserves the success. Yeah, he definitely does, guys. He's very hard worker. I mean, covering all these earnings, putting all this data in, it's like it's a never-ending job. And he's still like his channel's tiny compared to an idiot like what's that guy's name? That little drunk Smurf. Um I'm just joking. I can't remember, but yeah, Tanner should have a lot more viewership. He's been growing great and stuff, but it's just he provides a ton of value, and those other like his other lackeys. I don't want to say that, but Roy and Tevis and all the other guys I sort of was introduced to through those shows. They provide really good analysis. I'm not saying like take it at face value or anything, but if you are somebody who doesn't like to do the sort of nitty gritty, hard nosed research, you can glean a lot from certain sources on YouTube. You just have to be very careful that you're using, credible channels, credible sources, etc. Alberto ran the Rock Marathon and enrolled in San Diego. Stock Goat, Amit, Patriots or Seahawks? Let's see what's going on, guys. I pound the table on Amazon after watching Wally and realizing Amazon will be by and large the future. Yeah. Amazon is going to own the future. Amazon has worldwide infrastructure built out like nobody. And I don't worry about their current capex because I think they know what they're doing. And I think they're going to they're going to scale like you're not going to believe. They're going to be everywhere all the time with whatever instantly. They come down off a mothership in space. Their warehouses are going to be floating somewhere up, and they're going to beam stuff down to you like Scotty. It's going to be epic. It's going to be huge. So 10x, I'm a buyer. Iovance, I know they're going to do a money raise, but I would still buy the hell out of the stock just for the science. I mean, this is a legit company. This company could be absolutely huge. You saw their lung cancer data. I mean, it was preliminary. It was a small data set, but your wing's tiny too. And, you don't discount that out of hand. Discount it in hand, that's for sure. BOGO on that. We got a BOGO on tiny wings. No takers. No takers. What about a BOTO? Buy one, get two. BOFO. I don't know. No idea what the hell I'm talking about, guys. But anyway, I would still buy IOVA. I would probably buy prop more heavily than IOVA right now because I think prop has a really good chance of having a somewhat transformational earnings report if production continues to trend the way I think it's going to trend. Thank you very much, J Money. Appreciate that. But I'm not going to go, try to go in depth with this one. I just think you're going to have to be a little bit patient with it, and you'll start to see they're going to bring in a ton of free cash off of the oil and gas they're pulling out of the ground. And you're going to see that they purchase these assets below market value when you consider what they're going to be able to do with them. And I think this company is going to spin off a lot of cash a few years down the road. But again, these aren't get rich quick stuff. Yeah, a lot of people love Hims, guys. I mean, I know Tevis was a big Hims guy, and it kind of fell apart there when they had that breakdown in the relationship where they were selling generic, you know, copy of the same drug or whatever it was. it seemed like that was kind of a doomsday thing, but they came back from that, and then the stock's been down again. So I have to sort of go back and see what's going on with the company right now because I'm not I don't own the stock, so it's not a stock I follow closely in terms of their comings and goings and the soap opera that is Hims. Um, let's see. If Neo hit $15, I'll be a millionaire. Me too, brother. Also, yeah, Nvidia was very nice to buy the dip there. Looked like they're about to get approved for the frontline melanoma. Yeah, that should be awesome, Keen's Tam. Um, looks like that is very. I didn't know they were about to get approval. JAGX popped today, by the way. Neo up 7%, just touching $5. The Neo chart looks really poised to make a move off of this. You see how much resistance $5 was, back in July, back in August. This is also resistance back here in June, so this is a critical level long time. The stock's been down in the dumps a long time. Some of it deservedly, some of it self-inflicted, but this company making a profit, if you can get that profit consistent and get cash flow where it needs to be so that you don't have, excessive dilution, money raise needs, I think the stock starts to obviously look a lot more attractive to institutional investors because you're not going to get cut off at the knees or the tiny wing or whatever the case might be. Um, let's see. Anyway, so yeah, so I would definitely, nibble on Neo here. I'm not saying I would go crazy with it because I think you have to get into the durability of the orders. But for those of you that are asking me, is the market over? Like, is the flash crash over? Was this a flash crash, or is this sort of a dead cat bounce and a false recovery? And we're going to see the real pain on the other side of this sort of couple days of a false move. And I would say no. This looks like a real bottom. So, and this some of this is from AI, but I kind of fine tune this a little bit, guys. Liquidation stopped abruptly, so the tape stopped showing the waterfall style selling that marks a margin cascade in progress. Bid depth returned quickly. Buyers step back in without hesitation, which doesn't happen if the market is still stressed. The high beta names stabilize simultaneously. That's classic forced sellers are cleared behavior. No new negative catalyst hit, meaning the drop was mechanical, not narrative driven. Well, it kind of accelerated by the employment numbers and such, but leverage metrics cooled, funding rates and perp skew reset, which is exactly what you want to see after a flush. So, the perpetual futures versus spot, all that bullshit, it's skewed back to at least neutral, it seems like. If this was fleeting and was a dead cat bounce, you'd see continued forced selling, new macro stress, credit spreads widening, and VIX spiking further. None of that happened. VIX normalized. So today did look like the end of the margin cascade, not the middle of one, not false hope. That doesn't guarantee straight up from here, but it does mean the structural selling pressure is gone for now. And I think I'd pretty much agree with that because it's kind of what I fine tuned there. Sorry, guys. I sent a quick text. Um. Anyway, so I don't know. I would buy any of these names. I would buy all of these names. Probably number one I would buy would be SoFi. Number two would be a tie for SMCI and Microsoft. Number 3 or 4, I guess it would be Amazon. Number 5 would probably be Prop right now. 6, Crispr. Crispr is a little more of a long-term waiting game. So um, right now, I think there's more immediate upside you can play with and then swing back into that stock a little bit later on. But it could catch fire with the right news. You just never know. Those biotech gene editing stocks move very, very quickly when they move. Um, So anyway, I think this is the end of sort of the, margin liquidation cascade that we saw as crypto crashed. Now, is this all natural price action? it's really, they might push you over the edge. Like market makers might kind of push retail over the edge, but retail really only has themselves to blame when you're buying crypto on excessive margin and you're over leveraged and you don't have assets to back up that leverage when things go wrong. I mean, I think that's just the central logical fallacy in most retail's thinking is they're like perma-bull and they have no plan. Most retail has no plan when things don't go like they expected it to go. What happens if your thesis is 100% wrong? How do you protect yourself? How do you mitigate your downside risk when you're wrong? That's probably the most important part of investing because anybody can, run winners up if you pick them. But the real kind of crux of the issue is what do you do with your losers? Do you let them crush your nuts or are you able to brush them off your shoulder with minimal impact to your, bankroll? I guess that's kind of a wordy way of saying, I don't know what. It's like money management. It's very, very important. It's not what you pick. It's what you do. You understand that? It's you. It's controlling yourself. It's controlling your emotions. It's having cash at the ready to buy this dip. You could have just bought SoFi in the 18s after two of the incredible earnings reports. This last report, they added more net profit to the bottom line than they did on the last one with much less marginal increase to the top line. Everything in SoFi's numbers and trends is starting to indicate that this is a tech company that's going to be firing on all cylinders. I mean, it's like Amazon, it's like SoFi's lending business. They knock that because it doesn't have the margin. They knock Amazon because it doesn't have the margins. Growth, profitability, taking market share, steady, stable. I'm fine to buy SoFi. I'm happy to buy Amazon. Delayed gratification is fine with me. Buyer of Microsoft. If you want immediate upside, if you just want the most immediate upside, your risk on, your big beta, tiny wang type of operator, a Lester Diamond style country club golf hustler. Buy SMCI. Look at that chart. Look at the highs. Look at the quarter they just turned in. Look at what happens if they can turn the margins around, how quickly their net income could go up. Because operationally, that's a well-run company that can squeeze that much profit out of those margins. You got to take your hat off to the wigger. The guy might play a little fast and loose with the numbers, might push forward some sales to get the guys their bonuses, the boys down in the pit, the boys down in the bullpen. The boys down in the bullpen need beer. You got to recognize some of this revenue a little early, okay, Wiggy? He's like, okay. Wait, what did I just authorize? I think they run that company like sort of Danny DeVito and Taxi behind one of those like chain link locked cab stand cards. Got Tony Danza out there yelling at him. Jim Ignatowski. Latka Gravitz. Hello. Thank you very much. Who else do you have in that show? I can't really remember. Taxi. Who watched Taxi? Yes, SMCI can easily go to 80 plus. SMCI can go back to 60 in a heartbeat. It's just what do market makers want to do with it? That stock is lightning in a bottle. Herpes on a hairbrush. Oh, as they say. If your hairbrush doesn't have herpes, don't worry about it. You're fine. You're fine. Anyway, this show was terrible. I'm going to go watch and see if Noto's on Tanner and Tevis. That'll be sweet. Congratulations to those guys. And if you're watching this show, you basically have no meter. You're a flatliner. You got a tiny wang. Know what I mean? Un poco mas. You guys have seen this before. So is your missus. Peace. I'm out. Thanks, guys.